Welcome to the deep dive. Today we're plunging into something really fascinating. It's an AI-generated 30-day price forecast for Bitcoin.
Yeah, specifically covering July 2nd through to August 1st, 2025.
Exactly. And this isn't just, pulling numbers out of thin air. Our source material uses these advanced deep learning models.
Right. They're crunching huge amounts of data, combining on-chain metrics, that's the real network activity, with market sentiment, stuff like that.
So our mission today is basically to pull out the key insights from this. We want to help you understand the potential trends, any shifts to watch out for, really what matters for Bitcoin this coming month.
And just for context, as we start this forecast period, Bitcoin's trading just under, $107,650?
Yeah, about there.
And this deep dive, it's really designed to give you a clear view. We'll highlight specific price levels, periods where things might get a bit choppy, expected volatility, basically.
And even some strategies.
Yeah, and strategic recommendations, too, sort of tailored for different investor types. But it's crucial to remember these are AI models. Great for reference, incredibly powerful lens.
But not a crystal ball.
Exactly, not a crystal ball. Use them for reference.
Okay, got it. So let's start with the big picture, the executive summary. What's the AI's overall take for these 30 days?
Well, the forecast calls it mild volatility. It sees Bitcoin starting the period around $107,550.
Okay.
And then potentially peaking near $111,900 by the end of August 1st.
So doing the math, that's roughly a 4% increase from where it is now.
Yeah, about 4% total change expected.
And what's interesting, you mentioned it combines on-chain data and sentiment. So this isn't just a price guess. It's grounded in network activity.
That's the core of it,
Yeah.
combining those deep metrics with market mood. So yeah, it suggests slight growth potential, but importantly, it's also flagging risks of reversal.
Ah, okay. So it's not all smooth sailing upwards.
No, definitely not. Especially if it hits certain, strong resistance levels. It's kind of a cautious optimism, I'd say.
Cautious optimism. I like that. So that implies risk management is key.
Absolutely paramount. Especially with that expected volatility. And the AI actually highlights some key trading levels to watch. Support around $110,000.
Okay, 110K support.
And resistance near $111,450. Those are sort of the bounds to keep an eye on.
Right, so we have these boundary markers. But what about the overall direction, the primary trend, as the forecast calls it? Is it a strong push-up or more tentative?
The AI describes it as a slight increase with moderate confidence.
Moderate confidence.
Yeah, so it's not forecasting a sudden rocket launch. It's more of a gradual drift upwards. The data shows prices kind of fluctuating around an average, but leaning gently higher.
That moderate confidence, though.
Yeah.
Does that mean it could easily wobble? What gives it that rating? And how strong is the underlying trend, the strength indicator?
That's a good point. Moderate confidence means, yeah, while the bias is upward, it's not a super high conviction. External factors, big news, sentiment shifts, they could definitely alter the path.
Okay.
As for the strength, it's also rated moderate. And that's backed by daily price volatility, typically in the 1–2% range.
Which isn't insignificant for Bitcoin.
No, but it's not extreme either. And you've
Okay.
got consistently high trading volumes supporting that. Plus, underlying stability from a really healthy hash rate, 837 exahashes per second.
Wow, 837 exahashes. That's huge. That signals a really secure network, right?
Absolutely massive. Yeah, supremely robust and secure.
Okay, so it sounds less like a straight line and more like maybe a winding road with some important turns.
Yeah.
Are there specific dates the AI flags, these key inflection points? This is where it gets really interesting for planning.
Yes, definitely. It flags 3 specific dates, or periods, really, early on, July 4th.
Okay, July 4th.
It points to a level around $108,780, and the signs there indicate an upward push.
Got it. Potential move higher around the 4th.
Then, mid-period, watch out for July 12th. The level there is about $110,340.
And what happens there?
That one carries potential for a significant reversal, so caution needed around mid-July.
Okay, potential reversal mid-month. Duly noted. What's the third one?
And then late in the period, July 27th, that's where it sees strong resistance potential, right around $111,445.
Ah, hitting that upper boundary we talked about earlier.
Exactly. These are the moments the AI suggests the market might, make a key decision, go higher or pull back.
Okay, that's a helpful roadmap. Lots of numbers, but they define the expected playing field. So these technical levels, support and resistance, how should we think about those strategically?
Yeah, they're crucial. So The forecast lists a few resistance points to watch. There's $111,065.
Okay.
Then that key one we just mentioned, $111,445. And the potential peak is near $111,930, almost $112K.
Right. And on the downside, the support levels.
Support starts around that $107,550 mark, the beginning of the period price. Then there's about $109,707. And that other key level, $110,018, just above 110K.
So how does the AI visualize the price moving between these? What's the price pattern? Is it just bouncing around?
It describes it as a horizontal channel with minor peaks and rising lows.
Okay, break that down. Horizontal channel means sideways.
Basically, yeah. Moving sideways within that range we defined. But the minor peaks and rising lows part is interesting. It suggests buyers are stepping in on dips, kind of building a base slowly.
So not just flat, but maybe gradual buying pressure building up.
Accumulation.
Exactly. It looks like an accumulation phase.
What about momentum? Is it building steam through the month, or does it fade? The momentum assessment.
It shows slight upward momentum early and mid-period.
Okay.
But importantly, it seems to weaken later in the forecast period. The AI notes some signs of divergence from certain on-chain metrics.
Like what?
Like daily transaction volume staying around 440,000. It suggests the price might be getting a bit ahead of the underlying network activity towards the end of the month. Interesting. So a potential warning sign there.
Yeah.
And the volatility outlook. Should we expect big swings or relatively calm seas?
Mostly stable is the expectation, but with a slight increase in volatility, specifically mid-period.
Around that potential reversal date.
Yeah.
July 12th.
Yeah, roughly July 12th to July 20th. In that window, daily price swings could reach up to 2%.
Okay, so a pocket of higher volatility to watch.
Right. But interestingly, the AI calculates a risk-to-reward ratio of 1.2 for that period.
Meaning potential profit is double the potential loss.
That's how it's framed, yes. Signaling the AI sees perhaps more upside potential than downside risk, even during that specific volatile patch.
Fascinating. Okay, let's shift gears a bit. The human factor, sentiment. How does market mood play into this AI forecast? What kind of emotional ride is predicted?
Sentiment's a big piece. The AI sees it starting kind of neutral,
Okay,
potentially shifting positive early on, maybe as the price ticks up a bit.
makes sense.
But then as the price gets near those resistance levels later in the month, particularly that $111,445 mark,
Yeah.
sentiment could turn anxious. You might see some selling pressure build as people get nervous near the highs. It's like the market gets a bit tired.
So maybe some early enthusiasm followed by late-stage jitters.
Yeah.
What about the different players? Big money versus retail. Does the AI see them acting differently?
It does, yeah. For institutional behavior, the forecast suggests the big players, the large investors, might actually be accumulating at those support levels.
Buying the dips.
Buying the dips. And that aligns with things like the stable hash rate and Bitcoin's high dominance rate around 64.7%. They probably see value there.
Okay. And retail, the smaller investors.
Retail sentiment might drive them to sell off more at those high resistance levels. This pattern often tracks with things like the Fear and Greed Index, which the AI notes as being moderate.
Right, the Fear and Greed Index. A moderate reading means folks aren't overly scared or overly greedy, kind of balanced. So retail might take profits near the top, driven by that sentiment.
That seems to be the suggestion, yeah.
This is where it gets really cool. Connecting all these threads, what are the key insights? Where are the aha moments where these different data pieces click together?
This is really where the AI's power shows, I think, connecting seemingly separate things. For example, it links that potential peak price near $111,930
The highest point.
directly to the underlying network health. It's not just wishful thinking on price. The AI sees the work being done, that massive 837 exahash rate, as the engine actually capable of pushing Bitcoin towards that level.
So the fundamentals support the potential peak. It's not just chart patterns.
Exactly. It suggests the network's strength is the bedrock. Another insight, current daily volatility is fairly low, under 1%, suggesting stability now.
Right.
But at the same time, you have over 440,000 transactions daily. That high activity hints at significant growth potential if it keeps up.
So low current swings, but high underlying activity. Interesting tension.
Definitely. And it connects the moderate fear and greed index with that strong resistance near $111,445. That combination could indeed trigger a reversal, much like we've seen in past market cycles.
History repeating, potentially.
Potentially. Also, an uncongested network, the mempool size is small, under 3,000 transactions waiting.
Meaning transactions are confirming quickly.
Yes, exactly. Smooth sailing. That actually supports the stable price forecast around $110,000. No major network clogs causing issues.
Okay, what else?
Bitcoin dominance, that 64.76% figure, it suggests stable capital inflow, but also implies that if Bitcoin stalls below $111,000, that money might start looking elsewhere.
Toward altcoins.
Towards altcoins, yeah,
Self-applied.
potential rotation. Also, low average transaction fees around $3.13 make trading attractive and help reinforce that slight upward forecast.
Cheaper to move coins around.
Right. And finally, network difficulty, nearly 117 terahashes. That reflects strong miner confidence. They're investing heavily to mine. Historically, that aligns with periods of price increase. It's all interconnected.
It really paints a complex picture. Let's drill down a bit more on those on-chain metrics. You've mentioned them a lot. How specifically do they bolster this forecast? These are the signals from the network itself, right?
Absolutely. They are the foundation. Take transaction activity. 440,000 plus daily transactions isn't trivial. That high level of use supports a generally bullish outlook.
Okay, activity's good.
Network health, the hash rate at 837 EHs, and difficulty at 117 T, that signals an exceptionally robust, secure network. It dramatically reduces the risk of, major network disruptions affecting price.
So the network itself is sound.
Very sound. Fee analysis. Those low average fees, around $3, plus the small mempool size, means fast, cheap transactions. That improves usability, makes the network attractive.
Good for adoption and usage.
Exactly. And market dominance. Over $2.14 trillion market cap, 64.76% dominance. That indicates stable capital inflow. But again, the flip side is that potential rotation to alts if Bitcoin hits that ceiling near $112,000 and can't break through.
Right, the dominance cuts both ways. Okay, we've dissected the forecast, the data, the insights. Now, the really practical part, what does this mean for you, the listener, depending on your investing style? How do we translate this into action?
Okay, let's tailor it. For conservative investors, the AI suggests a strategy of gradual accumulation. Maybe start dipping in around that $107,550 support level.
Small positions.
Small positions, yeah. And use a strict stop loss, say around $106,000. Keep the total capital low, maybe under 5% of your portfolio for this play, and wait. Wait for confirmation of a clear breakout above $111,000 before considering adding more.
Patience is key for the conservative approach.
Yeah.
What about moderate investors, someone willing to take a bit more risk?
For moderate investors, the idea is more towards swing trading, trading the range. Look to buy near support, maybe around $109,770, and sell near resistance, like $111,065.
Aiming for smaller profits within the channel.
Exactly. Targeting maybe 2–3% profits per swing. They should use tools like the Fear and Greed Index to gauge sentiment and adjust, maintain a balanced risk, maybe 1.1 risk-reward, and watch on-chain stuff like the mempool size to anticipate volatility spikes.
Okay, active management within the range. And for the real go-getters, the active traders.
Active traders might look to capitalize on shorter-term moves, maybe buying at those minor peaks like $110,340, anticipating a push higher, and selling near the top resistance, $111,930.
Playing the volatility.
Playing the volatility. They might increase position size. If fundamentals like the hash rate are rising, they're accepting higher risk, maybe allocating up to 10% capital. And the AI even mentions considering leverage mid-period during that potentially more volatile phase. But obviously, leverage adds significant risk.
Definitely. High risk, high reward potential there.
Yeah.
Does the AI suggest any specific optimal entry points for anyone considering a position?
It does highlight two possibilities. Entering around $108,780, perhaps near that early inflection point, with a stop loss at $107,000. Or entering near the $110,018 support level with a tighter stop loss at $109,000.
And managing the overall position size.
Generally, allocate based on your risk tolerance. The forecast implies maybe 20% of your Bitcoin allocation for short-term plays based on this forecast, and perhaps 50% held for longer term, adjusting based on that expected volatility.
That makes sense.
Yeah.
Now we have to talk about reliability. How much faith can we put in a forecast like this? It's AI, but it's still a forecast.
Absolutely critical point. The reliability assessment varies. For the very short term, within this 30-day window, the AI rates its accuracy as high, about 80%. That's because the near-term data is usually more predictable.
Okay, pretty confident for the immediate future.
Then midterm, looking a bit further out, confidence drops to moderate, maybe 60%. Why? Because macroeconomic factors start to have a bigger potential impact, and those are harder for the model to predict accurately.
Right, external shocks.
Exactly. And then long term, beyond this forecast period, reliability is assessed as low, maybe 40%. Long-term crypto forecasting is just inherently difficult, very susceptible to unexpected events, black swans.
Understood. So, high confidence, short term, less so as you look further out. What are the inherent limitations? What can this model simply not see coming?
The source is clear on this. Big one. Global regulatory changes. A surprise crackdown or, conversely, a surprise approval somewhere major that could completely throw off the forecast.
Yeah, regulation is always a wild card.
Huge wild card. Also, general macroeconomic volatility, sudden inflation spikes, interest rate shocks, geopolitical crises. This model isn't designed to predict those macro events.
It focuses on crypto-specific data.
Mostly, yes. And finally, the on-chain data itself, while powerful, can change fast. A sudden drop in hash rate, a spike in exchange flows, those signals could shift quickly, impacting the forecast's accuracy before it can fully adapt.
So no model is perfect. Good caveats to keep in mind. Okay, so let's wrap up this deep dive. The core takeaway seems to be, for the next 30 days, this AI forecast suggests slight growth for Bitcoin. But it's not a straight line. There are key levels, potential volatility pockets, especially mid-month.
Yeah, and the emphasis really has to be on smart risk management. Use these numbers, these insights, as a valuable reference point, a tool in your toolkit.
So not as gospel. Don't trade blindly on it.
Absolutely not. While the AI's ability to process data is incredible, those real-world factors, macroeconomics, regulation, unexpected news, they remain powerful, unpredictable forces. They're the true wild cards.
So a final thought for you listening. What stands out to you from this AI's perspective? How much weight do you give these kinds of predictions compared to your own gut feel, your analysis of the news, the broader market, especially in crypto, which moves so fast?
Yeah, what's your personal blend? It's a fascinating space, that intersection of technology, data, and ultimately human psychology driving the market. Worth keeping an eye on, definitely. Keep exploring.